Good day to one and all. This is Dr. Sivaraman of iknowindices.com. Today we are on 12th of December. Between 5 and 5:30 GMT, I'll try to give you the Asian session live market analysis and the forecast webinar explaining the expected market moves on the session wise from 12th to 16th of December this week. And also I will explain to you the market reading, how exactly we can read and find the intentions of the players. And also I'll explain to you the trading strategy, how vital it is for us to consistently earn money from the market. Basically, the forecast is to reduce the uncertainty. Most of the occasions you come across that when the forecast comes true, then immediately we go in for the overconfidence, thinking that the market is following the technicals and try to commit more positions. This comes out of the greed. And once the market goes against, then immediately we find that we have taken too many positions, and that leads to that of the panic conditions. So when you are influenced with that of the emotions, then automatically we find that the decision making become distrust decision making. In order to avoid such distress condition, one need to expect the unexpected, like a professional. A professional is a one who expects the unexpected and also controls his emotion irrespective of the context and the condition and try to deliver the material. So we have to be like a professional, controlling the emotions, not to be stressed by emotions, and only look into the market and take appropriate decision. Once the market gives the loss, or once the market shows the profit in your holding position, we should not react to that much. When we emotionally react to that, then we fail to understand the market can suddenly reverse and show us some surprise. That is why you find invariable of the newbies and those who are in the market for several years, but still they are out of the grip of fear. You find they fail to control their emotions. So controlling the emotion is the first aspect to becoming a successful trader. So in order to reduce the uncertainty, on a weekly basis, I am giving the market forecast. So this is the market forecast for this week. Besides, I also explained to you how the market reading has to be done. So once you have the derived forecast, which is given free of cost through FX Trade, and then also the method by which you can understand the market moves by using the live market code page, you find predominantly your uncertainty is reduced. But still, anything can happen in the market. So as a professional, we expect the unexpected and try to use the trading strategy. Thereby, we are able to limit the risk and maximize the profit. So these are all the three components of our trading system. Once you follow systematically, you find that you are in a better position to control your emotions. See, people can say that simply, control your emotions, control your emotions. But while telling, they themselves become emotional. So we have to understand it's easy to preach that control your emotions, but it is extremely difficult to practice it. And normally, a good teacher is the one who follows whatever the preachings is doing. Thereby, the people are able to really get convinced that it is possible to follow. And then later on, they follow without even the teacher instructing them. So that's the system called the guru system. So one needs to understand that you have to have a full faith in the system, and then you find the system is really helping you to get rid of the market fear. Once you get rid of the market fear, you find that you are not under the grip of the emotions while taking decisions. So then once you use your common sense and take simple decisions, and those decisions become vital. And normally, when you look into the live market quote page, you know very well where the currency is, whether it is the lowest level for the season or the highest level for the season. So near that of the lowest level for the season, doing a sell and buy trade is detrimental. Similarly, buying near the highest for the season might be counterproductive. But it might appear that you can aim for about 30-40 pips or 50 pips swing trade from there. But if you miss, it will be a deep problem. So when you have a limited equity, if you want to trade successfully, then take only one position. Until you close the position, you try to handle it properly using the hedging. Once the position is closed with a profit, then think of another position. Every week and every day, every session, you come across the trading opportunities. Market continue to make up and down moves. That is part of the game. Only then they can confuse the traders and trap the traders. So the players are here to trap the traders. We should not become victim again and again and become a fool in front of the market. So if you want to be a wise trader, if you want to be a smart trader, then try to be an opportunity trader. Don't develop the feel of becoming addicted to trading. So you wait for the good opportunity to come. Once the market volume builds up, then the players make whips or moves during that of the yearly trend reversal time. At that time, if you commit position, when they make a very quick drop, you try to take a buy and keep the hedge order to limit the risk. Then quickly they will reverse the market and go up. Then you remove the hedge order and keep stop at entry and trail the stop to maximize the profit. So that way, if you could capture the profit, and this yearly trend reversal time will not give you fear, but it will give you great profit. Now this is the yearly trend reversal time, the month of December and January. So we are in the second week of December. So we have to follow the session-wise forecast in order to understand what the players intend to do. The players are expected to make the swing and firm up, swing and slide, and swing and rise moves today. Then tomorrow they are expected to make a dip and rise, then swing and firm up and swing and rise. Then on midweek they are expected to make the swing and slide, then make a nominal firm up and again drop. So keep in mind that they gain the levels to drop the levels to gain. That sort of moves, they do it as a wide range swings during the yearly trend reversal time. Then later on, they will make one-sided moves. So we have to be very careful while this sort of market, when they create uncertainties, suddenly by making a drop or by making a rise, we will come across very frequently extended stop and moves for about 150 pips on the downside or on the upside. And you know, before that of the ECB last week, and during that of the start of the ECB, they made an upwards extended stop to 1.0873 and then made the drop in the case of euro. Then similar moves Now they made it towards the US session on Friday, a quick downward move. So they are known to make such moves during that of the yearly trend reversal time. So it is difficult to call trend is your friend during this particular time frame. Then on Thursday, swing and slide move is expected during the of the Japanese session, then followed by swing and rise and swing and firm up move on Thursday, European and US session. Then on Friday, they are expected to continue to gain the levels. So this time you will come across Friday, they will make the gain. Last week I was explaining that they are expected to make the drop. So each week will come across, they will make up and down moves, but which one is going to be the first? So they are expected to gain the levels from the lower levels and then start dropping on the Wednesday, and then again gains back the levels till Friday. That's what expected or envisaged by the forecast algorithm. Then coming to the other levels in which the currencies are expected to swing, Europe would swing from 1.0525 to 1.09 area, GBP from the 1.26 to 1.29 area, then USDN from 115.50 to 109.25 area, then CHF from the 1.0225 to 0.9850 area. Then in the case of Canadian dollar, could come down to 1.3050 and then go to 1.34 area. So now when you see that Euro and GBP are at a lower level, Canadian dollar is also coming down, making the US dollar weakening move. All other currencies are making the US dollar gaining move, but USD CAD, they are specifically making US dollar weakening move. That means it is gaining strength along with that of US dollar. Sometimes they make a move of this nature in order to handle all the CAD crosses. Then in the case of Australian dollar, 74.25 could be the low, 77.75 could be the high during this particular week. Then we'll come to that other market reading. Euro formed the initial low 1.0526 and 1.0560 was the initial high. They made a brief upward stop into 6.9 and then come down. In the case of GBP, 1.2580 is the low, 1.2599 is the high. They not breach the low or the high. USD and 115.20 is the low. They just breached it by 4 pips and come up. And 115.62 is the high, which is not breached. So they made a brief downward stop and come up. They will make a brief upward stop and start making the slide. They will do the consolidation, induce the traders to buy during dips, and then continue to make one-sided drop later on, similar to that of what they have done it in the case of USD CAD. In USD CHF, 1.0153 is the low, 1.0214 is the high. They are not breached the low or the high. Then Canadian dollar, 1.3115 is the low, 1.31362 is the high. They are not breached the low or the high. Australian dollar, 74.31 is the low, 74.96 is the high. They are not breached. So if you watch carefully, that only in the case of Euro and USDN, they made the upward or the downward stopping. So here it shows that they are making the contrarian move. Euro is in positive net change and USDN is also in positive net change as a contrarian move. Then similarly, Euro is in positive net change, USD CHF in positive net change, which is another contrarian move. So they are handling the crosses briefly to start with. Later on, they are expected to make some nice moves. And as I explained, they could make a downward move. during the European session, and then start gaining the levels again. So dips are buy opportunities, and on Wednesday they will be making the intentional drop. Wait for 2 sessions and start up the third session and then buy. Then later on you will come across that rise continues, and then you can book profit by weekend quick rise. And these are all the recommended trades. You can keep the buy limit order near that of the low and keep hedge order to limit the risk. And once the position makes profit, you keep stop at entry and then try to maximize the profit. They are unlikely to make for the big drop in the case of US Euro, and also USD yen, they are expected to make a quick drop similar to that of what they had done it in the case of USD CAD. At the time, USD CAD is expected to make an opposite move. When all other currencies are making the USD weakening move, USD CAD is expected to make the USD gaining move. That sort of moves they are expected to make during the trend reversal time. They will pick up any one currency and then try to make the contrarian move in order to handle the respective process. Then these are all the market timings. Follow them carefully so that you will be able to really understand. Early and the late sessions they handle the majors, mid sessions they handle the crosses. You will be able to understand and appreciate. If you take the position during the early session, try to close it during the late session. Or if you identify an intentional move, take during that of the early session and close during that of the third early session, so that when they make a very quick rise, book profit and wait for the drop to happen as an extended move, and then try to take back the position again. So try to trade wisely and see that the market gives great trading opportunity during that of the yearly trend reversal time. Keep in mind, only when there are quick moves you will enter into the market. Then you will be able to capture very good profit. If you think that the market is subdued, so we'll enter and do some scalping, you might do that for 2-3 hours, and suddenly they will make whipsaw moves and you will lose all the money what you have earned from that of the scalping. That is why you find the scalpers do not become the professional traders. So if you got any question, you can ask me the questions here. I'll be willing to answer the questions. This is the forecast sheet. Brent, do you ever recommend taking weekly positions? Yes, not during the trend reversal time, during the trending time. From the month of February, we'll come across the upward trending move for the new year is expected to happen. Then during the first week of February, you can take a buy in the case of Euro and GBP and wait till the end of May and book profit, May 2017, and book very substantial profit. Or you can just do the position trade in your real account, where you have the segregated account, like you have the Euro account, GBP account, USD account, etc. You can simply park the money in Euro and GBP when they are very weak by January, and then later on buy when they are very weak, and later on when they become very strong in the month of May, we just convert back to the US dollar. That will be very weak. Then again they will make the reversal for about 1.5 months and then continue to make. At that time you can do the position trade. So either currency conversion trades or position trades can be done only during the trending time. During the trend reversal time, if you do position trade, hold it for 2-3 days and then you'll find invariably the positions start making big loss. Suppose somebody has taken a sell position in the case of USD and holding it for a long time, you find that substantially they gain the level. Similarly, somebody has taken a buy position in the case of Euro at a higher level, waited, then it will be continuously making a loss. So holding a loss-making position is not position trade. You have to use the hedge, and if the hedging is continuously making profit for more than 2 hours, simply close the buy position and maximize the profit on the sell side. That should be that approach. The US dollar gaining moves are usually over 100 pips. Yes, they will make about 150 pips in the case of Euro. When Euro drops about 150 pips, that will be the type of US dollar gaining move. Similarly, GBP can drop about 250 pips as a US dollar gaining move, and Yen and CHF can make 200 pips net change level. Not necessarily every time there's 100 pips. It will be more than that. Sometimes they make only 75 pips. It depends upon the volume under the traders' committed positions. Accordingly, they'll make the move. It is not based on the fundamental data. People think that, okay, if it is a very strong fundamental data, then they could make about 200, 300 pips gain or the drop. And if it is a weak fundamental data, it could make about 75 pips move and things like that. It is not like that. And you know, this beginning of this month when the non-farm payroll was released, obviously they made any move. So you have to keep in mind that the players can make moves depending upon the traders' committed positions, not depending upon the fundamentals or technicals. Because they are here to make money. And by showing Euro at 1.30 or 1.02, they don't gain anything on that. They need to earn money because it is a leverage trade. So once they take the leverage position, they need to close the position in the market, similar to us. So they use the bank terminals to make such a rigging in the market. The only difference between us and them is they have got a huge money power. But still, it is not unlimited money power. They have got the limitations. That is why they handle only 2 currencies at a given time and try to manipulate and the rest of the currencies under crosses and then try to capture the profit. So normally they make one currency as a sentiment creating currency. Now you find that USD yen is making a big rise to create the sentiment, one-sided rise to create the sentiment. Sometimes they use GBP to create the sentiment. They're making a big drop in the case of GBP or big rise in the case of GBP. Euro is relatively less vulnerable currency because the volume is very high when compared to the rest of the currencies. So if they gain, there will be people willing to book profit. If they drop, there will be people willing to book profit. So they will make the move in such a way so that they are able to earn from both the type of traders. That is why you find Euro move is slightly different from the GBP move. Then only the orders can move the net change. Yes, only when they place higher level buy, the market can go up. Whereas you and I cannot place a higher level buy. When Euro is trading around 1.0557, if you place 1.0575 a buy order, it will only fill the market. It will not give a higher level buy, 1.0575. Similarly, if you want to sell it at 1.0525, when the market is around 1.0557, it will only fill the current market level. Whereas in the bank, they can place an order 1.05 sell. So that will push the market downward. Similarly, 1.06, they can keep a buy order that will push the market upward. How it is possible? Only with a volume. So they will place 10,000 lots, sell, or 10,000 lots, buy. Then so much of corresponding selling or buying will not be available in the market. Then it gains or drops. And they've got specific orders method in the bank, and I cannot discuss more about that particular order, with which they only push the market without taking a sell. They can push the market downward to 100, 200 pips, and normal order they can just buy back all the stocks which are exposed. Any other question, please? So the big players use their private banking arms and rig the market. They may say so many stories, but don't trust them. In order to divert the attentions of the traders, they will simply say that nobody will be able to manipulate the market, etc. And it is a man-made market. If man is not manipulating, how it is making such spikes and things like that? God cannot come and do that. So no more questions coming forward. So they are making subdued moves, and they will make the moves afterwards once the traders commit positions. So I take this opportunity to thank FX Street for the facilities provided to present the webinar. I'll come back on Friday and try to review the market, how exactly they made the moves in the market in line with the expectations or against, and then we will try to take further understanding of the market. Wish you all the best in your trades. See you on Friday.